do you get approved for a business loan? Today we're talking about just that. We're actually going to give you 5 different tips to get approved for the most financing at the best terms for your business. We're going to take a look at the fundability formula that lenders use to make lending decisions about you, like whether or not you should be approved or not, even the rates and terms that you'll pay. We're going to take a look at the credit reports that lenders use, talk about how to get those reports at absolutely no cost, and how to improve your credit reports and scores to be able to get approved for even more money. We're even going to dive in and take a look at the cash acquisition formula that lenders use and talk about how you can tap into this to know within seconds the type of financing that you can get approved for. We've got a lot to cover, so let's dive in. When it comes to getting approved for a business loan, there's a lot of things that lenders look at. And today I want to talk about 5 very important things that if you get these right, radically increase your chances of getting approved. It starts with fundability. Fundability is the formula that really determines how much money you can get from the lending system. It's the stuff that lenders and credit issuers are really looking at when they're reviewing your application. Look, you may think that you've been denied before because of credit, because of income, but the reality is most applications are denied before that stuff's even looked at because you don't meet these basic fundability factors. And 2 things you need to know about fundability are your address and your phone number. So when it comes to your business address, you want to avoid PO boxes, mailbox addresses, UPS addresses at all costs. These are housed in a database that lenders and credit issuers can access, and they know that you're using that strictly for mail purposes. So you really want to actually consider a retail location if your business warrants one, and if not, then you really want to consider a virtual office. So a virtual office is offered from places like Regis, Alliance, and Da Vinci, and this is where you can have an address in a high-rise building in Tampa, Florida, get your mail there, they're even scan it and send it to you. So the perception you're creating for lenders is that you're in very expensive commercial space, but the reality is you're paying pennies on the dollar for that space because you're just really renting a legitimate mail address. So you want to really stay away from home addresses, stay away from PO box, UPS addresses, and consider a retail location or a virtual office instead. The next thing you want to consider is making sure that your phone number is set up the way that lenders and credit issuers really want it to be. You have to avoid using mobile phones. You have to avoid using home phones on your application for credit or financing. You really want to consider getting a real business line or even a voice over IP line that's available from a lot of different places like Ring Central, even Freedom Voice. These kind of numbers will help give you a lot of credibility, especially if you get the number as toll-free. Lenders prefer that you have a toll-free business number, and they're really going to look to make sure that phone number is listed with 411. Look, this is one of these secret criteria that a lot of people just don't know about. But a lot of lenders and credit issuers do a basic check to even see how established your business is just by seeing if your phone number is listed with 411. So make sure your phone number is listed with 411, and if your address and phone number are listed that right way, then it goes a long way to helping you get approved for financing. Speaking of getting approved for financing, lenders are going to look at your business credit reports, even though they might not tell you that they are. There's a law called the Fair Credit Reporting Act that when somebody pulls your consumer credit report and makes a denial decision based on that information, they have to tell you by mail which credit bureau they used to get the information and why they actually issued the denial. But that doesn't exist in the business world. The Fair Credit Reporting Act doesn't apply to commercial credit. So the problem is that in a lot of cases, lenders are pulling your business credit reports and you're not even aware that they're doing so. So you want to make sure that you get your business credit reports from Dun & Bradstreet, Equifax, and Experian. And at the end of this training, I'm going to teach you how to do that for free. You want to get these reports, you want to look at them, review them, and make sure you're adding accounts that report to the business credit reporting agencies. Having established business credit, having trade lines or accounts that report on your business credit profiles, and paying those accounts on time or early to making sure you have good scores is very important to not just getting approved, but getting approved for the most money at the absolute best terms. Now you can go to creditsuite.com/reports just to see if you have any established credit with the reporting agencies now, and that'll give you a preliminary idea of whether you're established or not and know the next steps to actually get established if you're not established already. You also need to make sure that all of your information is congruent. Look, the number one reason that applications for credit and financing are denied is because the lender thinks the application's fraudulent. And believe it or not, it's really easy to fall into that bucket of potentially fraudulent applications because what happens is that you ultimately don't have information that matches when you go to apply for credit or financing. So for example, when you go to apply for Bank of America credit card, then what happens is if you actually come in and they find incongruent information online with Secretary of State, for example, they're going to deny your application. So if they take your application data and can't match it precisely with even Secretary of State data, then they can't verify that the address or the business business that's actually applying is the same one that they're locating online. So all of your information has to be congruent. This means your offline listings, like your utility statements, your bank statements, and it means all of your online listings, your website, your social media pages, even all of your listings on places like Yellow Pages. Anywhere that your information is listed, you need to make sure that that information is congruent. And you should also know exactly what lenders are looking at to determine if you should be approved for financing or not. I call this the 3 C's cash acquisition formula, and it's really simple for you to know within seconds using this formula whether you can be approved for financing or not. Lenders are always primarily looking at one of 3 different things to determine if you should be approved for financing. The first is credit. How good is your consumer and commercial credit? If you have good credit, well, that opens up a lot of funding opportunities just based on having good personal credit. If you establish your business credit, well, that opens up all kinds of revolving credit opportunities for you just based on your business credit. Now, the second C in the formula is cash flow. If you have consistent cash flow in your business, and you've been in business typically 6 months or more, well, there's all kinds of cash flow financing options for you as well. Cash flow financing, merchant cash advances, even financing from places like PayPal, Square, and Stripe all become available with 6 months time in business and consistent cash flow. And the good thing about this 3 C's formula is you only need 1 C to get approved. So if you have consistent cash flow, your credit doesn't really matter. You're still able to get approved for this kind of financing even if you have bad personal credit. Now, the third C is collateral. And there's a lot of different types of assets that can potentially work as collateral to qualify for business financing. Stocks, bonds, 401ks, IRAs, even inventory, equipment can all be used for you to actually get approved for financing, even if your credit's bad, even if you have no cash flow. So when lenders are looking at to determine if you should be approved for financing or not, they're looking at credit, cash flow, and or collateral. The more of the C's you have, the better type of financing you can get. So if you have collateral, good personal credit, good business credit, and consistent cash flow, verifiable for tax returns, for example, then you're able to get the coveted SBA loan. But even if you have one of those C's, you can get one of those different types of category financing. And if you have even 2 of the C's, like credit and cash flow, then you can even qualify for other kind of financing like term loans. So this is hopefully a good amount of tips that will help you get approved for the most amount of money for your business. If you'd like to talk more, give us a call for a free consultation. On a free consultation, we will help you get your business credit reports for free. We'll even go over those with you and give you tips and tactics to improve your business credit. We'll do a fundability assessment, not just looking at your address and phone number, but looking at a lot of the factors, and there's 125 factors in fundability altogether. So we'll help look through a lot of those factors, help you realize what you need to fix to be able to have the best chances of getting approved for the most money. And we'll also come in and we'll also do a funding qualification. We'll tell you all the financing you can qualify for right now. You can get that consultation by giving us a call at 877-600-2487 or scheduling online at creditsuite.com/consult. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get money to start and grow your business.